back to Primary Source China Investment. This week, we're on show I6. And Pengwo and I are talking a little bit about earnings, because at the end of the day, earnings matter. And it's easy to get distracted. You know, when we're talking China, we're talking about trade, we're talking about all of the macro information that's coming in, we're talking politics, but at the end of the day, the earnings are what drives the future value of stocks. So today, we're looking at the top names in the CSI 300. And before we get to those 10 names, I won't bury the lead. The biggest stocks on the mainland behave more like value stocks than growth stocks. And that might explain a lot. So we're going to get into it name by name. We're going to go quickly because there's 10 of them and we want to get to each one of them. And the first one up is our favorite, Maotai. Earnings for fourth quarter are expected April 3rd, but you can see a bit of seasonality in the earnings per share. But more importantly, you see earnings. This is a company that makes money. Second up is CATL. This is the large battery maker, and we've talked about it on the show. While we were putting this together, CATL actually had an earnings announcement. So earnings per share grew at 64% and revenues were up 44% on an annualized basis. That's a huge number, and it sort of maps because CATL is the high-flying name in the high-flying EV space. The third name in the CSI 300 is Ping An. And those of you who don't know, it's a large financial services conglomerate, started as an insurance company. Consensus earnings for for 1.64 RMB to be released on March 21st. You can see some drawdown in Ping An's earnings over the last 12 quarters or so.
Yeah, this CSI 300 really represented the larger cap in the Asia market. I just realized the CSI 300, they get a little bit more diversified in the sector. It used to be like the financial sector take the big percentage. And right now it's get really diversified, which is definitely a good sign. The total market cap of the CSI 300, I bet probably definitely more than 50%. For those big companies that really the leader in each sector, financial sector is pretty much big. The earnings still matters. So
Yep.
lot of analysis, valuation, information is all about the earnings. So it's definitely a good sign to reflect the China overall Asia market.
Yeah, just a couple points on that. The top 10 names in the CSI 300 represent about 22% of the total market cap of the CSI 300. The second point is, yes, financials are down, and that's probably because financials have underperformed.
Because tech area is up.
Yeah, so that's basically what happened. So yeah, financials are down, but that's because they haven't grown. Yeah, the next one we have is China Merchants Bank. It's a name we've talked a lot about. If you group these quarterly numbers together, you see annual growth year 23 over 22 of 7% and 22 over 21 of 13%. I think the important aspect here, Peng, was, yeah, these are the big companies, but they also make money. The problem is they don't grow. Whereas, well, CATL is the exception. In the US, if you look at the top 10 names, those top 10 names are really the growth drivers of the US stock market. Next name up is Medea or Medi, and year-end numbers scheduled to be released on March 28th. Another company that consistently makes money, but doesn't grow as you might expect, right? Medi makes refrigerators and toasters and a lot of home appliances. The next name is...
lots of time we talk about in China, every sector is facing the intensive competition. That really means 卷. And so this competition is hurt a lot of like the middle or small companies' abilities to make the profit. Even like the price war, it's not be very helpful with the small company. For those big companies, because of it's more like the monopoly in a certain percentage of the market. So they, no matter market is up or down, their revenues is relatively stable, especially like some of the state-owned company.
That's a great point in terms of competition, right? Because these large names, they can forego profitability in the short term to squeeze out startup. I mean, we talk about EVs a lot because that's a strategic initiative on the mainland. And EV makers are cutting their own throats right now because you have overcapacity and you have
Yeah,
massive
and the big
competition.
companies, because that's a lot of the risk in the operations for the business runnings. So large companies naturally have a better advantage. But
Definitely.
the good thing is many small companies, especially in the financial asset management area, I just realized a lot of like the small companies, they probably circle around a certain big name so provided a different service.
So continuing on, our next name up is another Baijiu company called Wulangye, and they're scheduled to release on April 28th, but we're beginning to see a theme here if you look at their EPS over the last few quarters. Profitable companies with slow growth. Zijing Mining is another name on our list, earnings scheduled for March 22nd. For those keeping track, the red font is a miss, not a negative, and the green is obviously an upside surprise. So you can see again, a profitable company, but not a lot of growth here. Here's a power company, Yangtze Power, earnings coming in at the end of April, but wanted to show a 5-year chart for this versus the index. So you may recall this company or not, that Yangtze Power was the developer of the Three Gorges Dam project. So it's a hydro energy provider. And if you look at a 5-year chart, it's actually decimated the index. And it's not a sexy company, but it does make a lot of money. And the market does reward companies that do make a lot of money.
Yeah, those investing in those companies, you have to be patient, wait for the long time. That's also like the dividend index or dividend product are welcome in the market, especially in the downside of the market. You will see any companies they get much have the high dividend, they will get better valuations.
Yeah, it's a little counterintuitive, right? Because if you're a foreign investor, you say, "Oh, I'm going to invest in an emerging market like China." It's like, well, no, that's like it behaves like a mature market. I mean, if you look at this Yangtze Power chart, 5 years it's up 50%, and the CSI 300 or the Shanghai Composite or whatever, is flat for 5 years. So 50% versus 5%, and you bought a power company. I mean, that is counterintuitive, but those are the facts. So when looking at allocating, you have to consider these kind of things, and not only just go for growth, but you have to go for what's going to give you return, and you need to be pragmatic about it. That's all we're saying today. And next is another bank, ICBC. It's a name we've talked about a lot. It's got a lot of small beats, but importantly, it's got a dividend of 7.25% right now. So that's a pretty good incentive, particularly where the 10-year is. And finally, to round out the top 10 is Hengrui Medical. And this is the big pharma name for China. And it's been a big bust. So it hasn't been this innovative juggernaut that people had hoped for. So, that could change in the future. But if you look at a 5-year chart or whatever you want to pull, the performance has not been great. So, what's the takeaway here? I think we've been hitting at that a bit, Pengguo. The biggest companies on the mainland have slow growth, make good money, and pay dividends. That doesn't sound like an emerging market. That sounds a lot like Europe. What's your thought?
Yeah, I think actually is China may be more like the developer market and the emerging market mixed market. So some of areas definitely is compared with developing market operations, whereas the other areas is still in developing.
Yeah, I think that's a good way to sum it up. And with that, we're going to leave it with show I6. This weekend is Selection Sunday for those following the NCAA basketball tournament. Good luck with your brackets, and we'll see you next week.
Thank you.